All right, let's talk about a feeling that, well, pretty much every investor has felt. That knot in your stomach when you watch the market's every little twitch. Today, we're going to get into why checking your portfolio every day can be so incredibly stressful and how a really simple shift in how you look at things can trade all that stress for some actual confidence. So let's dive in.
It all comes down to these two words. Seriously. If you take away only one thing from this whole explainer, let it be this. Just zoom out. It is without a doubt the most powerful thing you can do to get some clarity and peace of mind as an investor.
So, yeah, let's talk about that anxiety. If you feel your pulse quicken every time you glance at the market, listen up. The problem isn't your investments, and it is definitely not you. It's the lens you're using to look at everything.
This quote just hits the nail on the head, doesn't it? Feeling stressed about what the market did today doesn't mean you're bad at this. It just means you're probably using the wrong tool for the job. You know, most of that panic isn't caused by prices falling. It's caused by zooming in way too close.
And the source of all that stress, it's almost always the same thing, getting caught in the trap of what we'll call daily noise. Short-term charts, by their very nature, are designed to show every little wiggle, which means they basically just fill your screen with chaos. I mean, think about what a daily chart is really showing you. It's a minute-by-minute reaction to every single news headline, every viral tweet, every sudden gut feeling of fear or greed that ripples through the market. None of that stuff really says anything about the true value of a company. It's just raw, unfiltered, emotional reaction.
And that's the trap right there. Because the scale is so tiny, a completely normal 1 or 2% dip can look like you're falling off a cliff. A single red day starts to feel like this huge warning sign that everything is going wrong, when, in reality, most of the time, nothing important has changed at all. Okay, so how do we get out of this noisy trap? Well, you already know the answer. We zoom out. When we shift our view from days to years, we start to filter out all that chaos, and we find something way more useful: the signal.
When you pull up a chart that spans a few years or even a decade, a totally different story starts to emerge. All those frantic, zigzagging lines from the daily view, they just smooth out. And what's left is the actual structure. You can see the real long-term trends, the economic cycles, the overall direction things are heading, and the context for what's happening today.
And this is just so crucial to remember. Markets do not move in a straight line. That up and down movement isn't a bug, it's a feature. Pullbacks are normal. Going sideways for a while is normal. Long-term charts are a great reminder that just because things are moving, it absolutely doesn't mean your strategy has failed.
This is the difference in a nutshell. The daily view is all noise. It's this tangled mess of headlines and gut reactions. But the long-term view, that reveals the underlying structure, the trends and the cycles. You're basically switching from listening to static to hearing the actual music.
Now let's be super clear about something. Looking at a long-term chart doesn't magically make investing risk-free. Oh no, the risk is still there. What it does do is it quiets that voice in your head that's screaming, do something right now. And it's that pressure that almost always leads to our worst decisions. Which brings us to a really simple but powerful rule that people forget all the time. Your tools have to match your goals. I mean, you wouldn't use a microscope to try and navigate across the country, right? So why would you use a day trader's chart for your long-term investments? Just look at this fundamental mismatch. If your goal is long-term investing, your tools should be weekly or monthly charts, and your mindset needs to be patience. But what do so many of us do? We take that long-term goal and we pair it with a short-term tool, the daily chart, which demands a mindset of constant, instant reaction. That conflict is where pretty much all investor anxiety comes from.
Okay, so this all sounds good in theory, but what does it actually look like day to day? How do we really move from that state of constant reaction to one of calm, deliberate patience?
The benefits are actually pretty huge. When you start thinking from that long-term perspective, you stop overreacting to every news alert. You cut way down on the temptation to constantly buy and sell, which just racks up fees and can lock in losses. It helps you stay consistent, and maybe most importantly, it helps you actually stick to the plan you made when you were calm and thinking clearly.
So here's a super practical technique you can start using today. It's totally fine to look at the daily charts. Go ahead, observe what's happening. But, and this is the key, when it's time to actually make a decision to buy, sell, or just hold on, that's when you take a step back. That's when you pull up the weekly, the monthly, or the yearly chart to make your call.
And if you need one last check, here is the ultimate filter.
Before you let some scary headline push you into hitting that button, pull up that one-year chart and just ask yourself this one simple question. If today's huge, dramatic event is barely even a blip on the long-term chart, it probably doesn't deserve your stress.
You know, at the end of the day, this is what it's all about. Trying to predict what the market is going to do tomorrow, that is just a recipe for anxiety. But building real confidence based on a long-term perspective, that's the real path to peace of mind.
So the next time you feel that little bit of panic start to rise when you're looking at a chart, just remember this. The goal isn't to perfectly predict the future. It's just to see things clearly. And that clarity, it almost always comes from taking one simple step back. So choose the long-term view. Choose clarity over noise.